I wish I could talk about Brazil and China and more Brazil and China, but I'll try to avoid them for the most part. Just maybe mention something briefly, but I'm going to focus a little more domestically and what's going on right here in our hometowns, and kind of look at some more domestic issues that we're facing with what's going on in the cattle prices. Uh, you know, up front, this kind of is what we'll look at. We have had some calf prices showing some positive movement since the 1st of November. October was pretty tough, pretty lean. As we hit the calf run, the past 2 or 3 weeks, and this week being the third week of November, we've seen really strong cattle runs through most of the state and across the nation. Uh, the first 2 weeks of November saw higher prices than October. This week things are a little softer, but not bad. The situation is we can say prices are higher the past 2 weeks, but prices still aren't good for those selling calves straight off the cow. It's still pretty low, not a very profitable situation. But they have shown some positive movement, and once we get through the first of the year, we'll really start to see those prices pick back up. Um, Feeder cattle prices are okay. I say they're strong. That's a relative term as to what we're talking about, but they're in a pretty good situation. We're going to look out. I'm going to show a slide, of looking way out into the future, and and we can see where we see a lot of positive movement in feeder cattle prices, and based on the expectations of what the calf crop will be for all of 2020, and what we're going to expect going in 2021. And there are some opportunities to hedge because of what the futures market is offering right now for some sales in 2021, given what cattle can be bought for right now. So if we just look at what has happened in the slaughter cattle market, uh, we could go all the way back to coronavirus time, and we can see where that huge dip occurred, when we would have typically been seeing prices really strong. Um, we've seen some really good positive movement since the end of summer in these fat cattle prices. Uh, I still have a little bit of hope that we'll see a week or two somewhere where we hit 115, 116 on fat cattle. Will that be possible? Well, 2 weeks ago, a lot of people would have said no, and I'm still saying yes. And then last week, with the huge increase in prices last week, $3 or $4 that we gained last week, it tells me again we still have a chance to hit that 115 mark. Now, part of that's going to be just because that part of that increase that we've seen the last week, a lot of that has to do with here we've got holiday buying going on right now, and I'm not talking about Thanksgiving, but Christmas and New Year's beef purchasing is occurring by most of these grocery stores and retailers that are doing anything with any product. So we're gonna hit the high points right here in the next week or so. I say next week. Next week will be a slow week just because of the Thanksgiving holiday. We may see a reversion back, but that first week of December, uh, we should still see some support in the market that first week of December, and maybe even into the second week of December, and then it'll be after the first of the year before we see much more support. But you can see what the typical trend is, and I expect we'll get up to 115 or 116 somewhere before the end of the year. When we look at these weekly auction cattle, 5 to 6 weight cattle that are going through the market, which there are a lot of them right now going through the market, tons and tons of them. And you can see in the graph here where it's easy to see that very last 2 weeks, if you're looking at the solid blue line, where we had 2 really good weeks of upward price movement. Again, these aren't good prices. They're not great prices by any stretch of the imagination, but they have improved. And the thing is we just had such a flat line on these prices all year. Uh, we started out the year really positive, expected those prices to just keep on escalating into March and maybe even into early April. But then coronavirus just took the bottom out, and what little recovery we got, essentially we can call it 140, and that's it. This year's price was 140, and bam, that's it. Um, but again, we're probably going to see a slight dip this week relative to last week, but it's not going to be much, and we should start to see some of those prices start to pick up, uh, moving into later December, and then certainly as we move into January. yearling type cattle. These are auction run cattle, but because most of these cattle are going to be sold in truckload lots of some sort, uh, for the most part in our state. But they're not bad. They're not good though, and it's hard to make much money. This is 7 to 8 weight steer prices. 6 to 7 weights have been taking a beating as of late. The past couple of weeks, the 6 to 7 weight cattle have been taking a beating, just not making any money. They don't know where to go. They come off a feed at the wrong time. Uh, Nobody wants to put them on grass because they don't have grass. They end up being the wrong cattle in the spring because, again, they don't go on grass in the spring because a lot of people are wanting lighter cattle, and so they're just taking a really hard hit. But these 7 to 8 weight cattle, they're gonna start to show a little more improvement as we get through the end of this year and into the first quarter of next year. The slaughter cow market has continued to be the highlight of the year. Uh, you know, I don't know what the key to that has been ground beef demand, and more ground beef demand. And it's just been really, really strong. And you can see we had that huge dip there, $10, $11, $12 a hundredweight during the month of October. Very typical because we just flooded the market across the nation with these type of cattle. But now that those slaughter cows are slowing down just a touch, they're picking back up. And when you can hit 55, 56 cents in November for slaughter cows, that is pretty stinking good. Not to say that they're not going, but they will go higher as we move into the first of the year. I expect by February we'll be back over 60 pretty easily for those animals as we get back into February of next year. Just quickly, we've been keeping an eye on this slaughter year. So this is compared to 2019 slaughter. So far this year, heifer is down 4.1%. Steers down nearly 3.5%, and beef cows are up nearly 2.5%. We've actually seen that steer slaughter. It was a larger decline early. If we'd gone back to the August meeting, this quarterly marketing meeting, that steer slaughter has actually picked up a little bit relative to the first 8 months of the year. Heifer slaughter has slowed down just a little bit compared to that time period, and then beef cow slaughter has slowed down just a little bit. So that's what we're looking at. We still got a few cattle that are fairly heavy. A lot of those end up being in the Midwest. A lot of those heavy cattle are in the Midwest, and so they hadn't all got moved out. They've still been on feed just a little longer than probably was anticipated by most of those feed yards. But at the same time, you also, if you look at regional finished cattle prices, you'll notice that those prices in the Midwest in farmer feeder country are a little lower than most of the rest of the country, and that's because of how heavy these cattle are. They're overly finished, and so they're taking a little bit of a dock on price the past several weeks. Even though we've had a lot lower slaughter rates, beef production is only down 0.6%, and that's all because of those weights again. I mean, we're killing cattle as fast as we can, and the packer is making good money. That's why they were willing to pay up last week for cattle, because they're still making really good money. Box beef cutout prices, which I'll show here in a second, are really strong, and there's plenty of meat out there. Consumers continue to demand it. Demand is good for beef. Pork production is up 2.3%. The export market for that has been very, very strong. That's where China comes in again, not to belabor China, but they're still looking for that meat, and that has, their demand for our pork has been a very much a savior for most of our meat products this year. To be able to move that pork out of this country, get it off the domestic market, then beef can fill in. People are buying beef. Same way with chicken. We still have mixed reports out of China. They're importing a lot of U.S. pork and soybeans. Again, that's a good thing. Keep it going. Japan and South Korea is still pretty strong market, and Mexico remains soft for right now. Here's what imports. We've had tremendous imports. Beef has been cheap. We've been importing a lot of it. Again, it's all mainly grinding beef that we're bringing in, and when you get down to it, when we have more consumers eating at home, or they're only way to eat out is at a fast food restaurant or a takeout restaurant. It's not very often you take out a steak. You don't call up the local steakhouse and say, yeah, I know y'all are doing takeout. Fix me, a steak so I can take it home and eat it after it's cooled off. Um, so, a lot of this ends up still being very much a ground beef market. And that's why we're importing a lot of that product. And like I say, we can import it fairly cheaply. Exports, after a good recovery in July and August, they fell off a little bit in September, but nothing really to worry about because it typically starts to slow down in that third quarter of the year as we head into the fourth quarter. And so as we get October and November numbers, they're not going to be great, but they're not going to be bad either. Uh, I think the key here is this middle bullet point. We have this new Asia Pacific Trade Agreement called the Regional Comprehensive Economic Partnership. It's similar to the Trans-Pacific Partnership. I think there's 12 countries involved in this, if I remember correctly. And I just named some of the major players from a beef standpoint, because what this is going to do is this is going to put China in control of a lot of stuff. And not that they're exporting beef or anything, but this new agreement, which the United States is not a part of, kind of takes up that Asia area. And as you can see, Australia and New Zealand are in the mix, and they're going to be it's going to really help them. We have let me slow down a second. We are on the same footing in Japan as Australia is after the TPP, and then the United States making a bilateral agreement with Japan. We were on better footing in South Korea than Australia was prior to this agreement. And so when all this agreement takes effect, I'm not exactly sure how it's going to play out, but we may see Australia being able to ship more beef to South Korea, who is, a major player in our beef exports. Similar with New Zealand, they'll be able to move a lot of product. And then I mentioned Thailand and Indonesia there, because we do ship some quite a bit of beef to those countries. I mean, they're not huge countries, but for the size countries they are, we ship a lot of beef. And if they're able to get that cheaper out of Australia and New Zealand, they definitely will. And so that could put a little damper on our exports as that agreement, which has been signed. I just don't know when it takes full effect. I guess I should have tried to find that information. But it may put a damper on what we're doing. Here's the box beef cutout. We've seen a little increase in those prices the past few weeks. This looks very distorted because of that run up in prices due to coronavirus. And when we weren't harvesting very many animals, a lot of people wanted to use the word shortage of beef. We weren't at a shortage. We didn't have a shortage. We just reduced production. And so that available supply in that time was contracted tremendously, which made prices shoot up. And we started to see a little bit of improvement in those prices here as of late. They're really, really strong, sitting around 220, 225 for choice boxes. Aaron mentioned this drought monitor. For cattle business, this is very important. If you'd have looked at this a couple of weeks ago, you'd have saw where Oklahoma was in terrible, terrible drought across much of that state. And the importance of that is the fact that, they've got a lot of wheat pasture. They get a lot of wheat planted in August and early September, and they're looking to put cattle on it in October and November. And it got so dry that a lot of those purchases slowed down. They're picking back up. They got some good moisture across the entire state, which is really positive for wheat production. And so they're starting to pick back up, and that goes into the Kansas area as well as the Texas Panhandle. So a lot of cattle country going to buy some cattle, but you can see as most of that West Texas area and Texas Panhandle area is still in severe drought, as well as parts of Kansas. So we'll see how that plays out. In the situation of cattle that stay local, we have a lot of good forage conditions across most of the state of Tennessee and most of the Southeast. So a lot of these cattle will go into some of those backgrounding operations and should support prices fairly well, even moving through the next several weeks, as well as they can be supported when there's a flush of high risk softballing calves coming to the market. Corn prices are going to put a little bit of pinch on feeder cattle prices to some degree. It's really good for corn producers to have higher prices, but when you're a feedlot and you buy all your feed, these higher corn prices should put a little bit of pinch on these feeder cattle. Will it mean a shift to heavier feeder cattle at this point? I don't think so. I don't think we've, $4 corn. We know how to manage through $4 corn, and I don't think that we're going to see this huge shift of, well, we wanted 750-pound steers, now we want 950-pound steers. Now, if prices go up even more, we'll start to see a gradual shift in what those feedlots are looking for, because they just can't afford to feed them for 180 days. They just want to be feeding them for 150, maybe 130 to 150 in some cases as corn prices go up. Hay prices, not much to say there. Up until this point, it's been pretty cheap feeding cattle. We've had such low corn prices through most of this year that feed was, since corn is the basis of what we base all feed prices on, it's been fairly cheap to feed cattle, and we're going to start to see a turnaround on that. These October and November cattle will still be very, very low feeding cost, because most of those cattle were when corn feed were cheap. But as we start to move into February, March, and cattle coming off of feed in February, March, April, we'll start to see those feeding costs have increased again. This is more of a look back as opposed to a look forward. Now, here we're looking into the spring on what futures are doing. Sitting at 139 as of the close yesterday, and I think this is the April. I think it's the April contract. Anyway, looking at 140, essentially sitting right at the 140 mark. Do we have some upside potential? It's hard to tell. I think we're going to trade flat until we have a little bit more information on how Biden is going to react to things. And I'm afraid what we will definitely see, I think we will see a move back down to 135 at some point, 136, 135, 136. That'll end up filling that little gap that you see about 7 days ago. I don't know if y'all can see the gap right here, but there was a gap there, and it's pretty common to fill gaps. And how recent that was and where we are relative, it just wouldn't surprise me if we don't trade down to that 136 area at some point before we get out of this contract. Let's look at August, though. If we look into the summer, we're starting to see some things materialize, and essentially a full $6-7 higher, $7 higher than the April contract. And so this right here is where I'm saying, there might be some opportunities to go ahead and hedge. Anybody that's buying cattle now that won't sell those cattle until June or July, there's a lot of cattle that go on grass and be there for 200 days type cattle. Or if you're looking even into buying cattle into January and February, there might be an opportunity right here to go ahead and hedge some cattle, the sale of cattle that you haven't even purchased yet. Not saying the prices won't go higher, but this is pretty strong price relative to what we've been seeing recently through the feeder cattle index. So kind of projections on fed cattle, I have the fourth quarter averaging between 108 and 112. Now, realize that's a fourth quarter average, and so I still think there's an opportunity for us to hit a week or two where we get 115, 116. I'm being a little conservative in the first and second quarter of next year. I don't want to get too out of line. There is opportunity, I think, that we could move a little higher than these averages right here. But it's a lot of this is going to depend on if we get more beef movement through food service folks. We're going to miss out on a lot of food service beef buying this holiday season, which would have really supported prices for the next few weeks. And then here's just a quick look at what we expect for those 5 and 6 weight steers going through the auction markets. And then, 7 to 8 weight steers and heifers going to be sold in load lots. I think there's some good opportunities as we move forward. And, if we're looking at 143 to 147 in May, that August would be getting close to probably 147 to 151 type area. Just call it 150, and $150 on a 750-pound steer can make some money if they're bought right. Or if your background and when you're on cattle, there's a good opportunity there. So I think there's some optimism in the market. relative to where we're sitting today, but it's pretty bleak just because of how low prices are. And with that, I'll stop sharing my screen and we'll open it up for questions.
Hey, Andrew, I got one quick question just to kind of kick it off. But I was watching the news this morning, and the panic buying is back for certain um, uh, uh, retail products, right? Is that going to end up going into the meat sector? Or do you think we're better positioned moving forward to not have the same set of circumstances, or I don't want to say same, but similar circumstances compared to what we've seen in the spring?
So no, I think you hit it. We're prepared for it because we've already shifted where very little of these my point is, number one, we're probably not going to see these big packers shut down again like they did in the spring. Number two, they've already shifted their lines more towards retail grocery and away from food service and restaurants, mainly because the cuts that they make for those are different than what the cuts generally go to, and the size packaging is smaller that goes to grocery stores and goes to those other facilities. And so since we've already seen that transition, they're already ready, that their lines are set up to do that. And that doesn't mean that we won't see buyers just pulling it off the shelves as quick as it gets there. But I don't think you're going to go in, because you didn't get there at 8 o'clock when they put it on the shelf, that it's going to be out. There's going to be a much more steady flow of product. But that doesn't say anything for toilet paper.
Yeah, you got to have your priorities. One thing I do want to quickly mention, if there are any questions, you can definitely unmute and ask them, but we have set our dates for our 2021 marketing meetings. I posted them in chat. They're going to be March 3rd, June 9th, August 18th, and November 17th. Same time. As always, if there's something additionally that anybody wants me or Andrew to cover, we are more than happy to cover specific topics. So with that, if there are any questions, we'll take them. If not, we'll let everybody get on with the rest of their day.